The same question always comes up. How can I pay zero taxes for my trucking business? The most common answer is have zero income. No, for real though. I know you see all the rich people in the news getting criticized for finding loopholes and not paying their fair share of taxes, and then a few years later, you see them on American Greed and find out that for the last 5 years, they've been hiring illegals, filing bankruptcy, and scamming folks out of their money, including the government. While this is not that video, because I'm going to keep you legal, I will show you how choosing S corporation status for our business saved us big time on taxes, and along the way, I'll give you some tips for your trucking business. Hey there, if you're new to the channel, welcome. If you're not, welcome back. I'm Linnell. I'm an accountant and IRS enrolled agent, and I co-own a trucking business with my husband. Here at Dot Your Money, we're all about fueling your life for success, what they didn't teach you in trucking school. So if you want to know all about growing a successful trucking company, subscribe to the channel so you won't miss out on any upcoming videos. In today's video, let's talk about legally not paying taxes. My goal is to give you the scoop of how you can grow your income from your trucking business, legally keep as much of it in your pocket as possible, and give you some pointers that will keep you compliant so you can sleep at night. Now, before we get into the video, just a quick reminder that I have a budget template that I set up which covers a sample year to plan and track your business income and expenses. Whether you're planning your first year or you're trying to get your current business reorganized, this template will help you get your finances straight. So make sure you click the link in the description box below to grab this free budget template while it's still available. I promise you won't regret it. Now with that out of the way, let's dive right into saving you some money. When we're not in the truck or in the office, you can find us on some kind of adventure. While some folks are homebodies and just want to sit around in sweatpants and t-shirts and binge watch Tyler Perry shows, we love to get out and live our lives. But that takes money, and we can't do it if we give it all to Uncle Sam. So we're always trying to find some kind of way to not pay taxes. One of those ways is by using S corporation status. What is an S-Corp? In our video on legal entities, I walked you through the different types of business entities, and I gave you the pros and cons of each. From that video, you can see how most trucking companies start out as little baby LLCs that you register with the Secretary of State. But then when it's time to put on the big boy drawers or the big girl panties, you have to choose which tax status to use. Your LLC trucking business can be taxed as a sole proprietorship or as a corporation. S corporation is a tax status, and it doesn't happen automatically when you form the business. You have to first get your EIN by completing that SS4 form, then you have to make the S corporation election on form 2553. I'll give you the pros and cons of electing S corporation status, and I'll give you a real life example of how it can help your trucking business. First, I'll give you all the good stuff, all the pros, all the benefits of being an S corporation. Then we'll talk about the bad. S corporations is like a corporation, but it reports its income and expenses like a partnership. So S-Corp, they act like a corporation because there's very limited liability. Meaning, just like if you bought shares and stock in Tesla or any other big company out there, your losses are only limited to the money that you put in it. There are no general partners, so you're only liable for the investment that you put in. But legally, when you own a business, you are still responsible for any negligence that you have. So you still want to have a good insurance policy and consider having umbrella policy, just in case, to make sure that your personal belongings are protected. S corporations act like partnerships in that, with a few exceptions that most likely will not affect your trucking business, S corporations do not pay federal income taxes. Unless you're in a wonky state like California, most states also do not charge taxes on S corporations. So there's no double taxations like you would have on a C corporation. The owners and shareholders of S corporations pay taxes on their personal tax return. If you choose S corporation status and you change your mind, you're not stuck with it forever, and you can change your election every 5 years. But as far as I'm concerned, I can't think of any reason that you would ever change, so that's not really a factor. You're not required to keep minutes when you have an S corporation, but I think that you should anyway. It's just good business practice. And another good thing about S corporation is there is continuity of life. So if your business is a sole proprietorship and you're unable to continue the business just dies. If you have an S corporation, then the business can be sold or can be gifted to a loved one or a friend, and all your hard work can be passed on to someone else. S corporations can also be eligible for the Section 199A, that QBID, Qualified Income Business Deduction. C corporations are not eligible for that, so that's another plus. And now the bad things, the cons of electing the S corporation status. So first, it can be difficult and expensive to set up properly. Anybody can set it up, but it needs to be set up properly. I don't recommend that you do that yourself. And if you stay to the end of the video, you'll see that the savings more than take care of the out-of-pocket expenses it will cost you to pay someone to set it up. But before we get into the nitty-gritty, let me know in the comments, would you be willing to pay someone $4,000 a year so you can save $20,000 a year? Do you think it's worth it? As I said before, most states do not charge taxes on S corporations, but there are a few wonky states like California that will charge you a minimum tax, say like $800 a year for your business, even if your business doesn't make any income that year. Another disadvantage of S corporations is that the shares are not easy to sell. Like if you have a public C corporation, people are always buying and selling, trading shares of stock all the time, but there's no public market for S corporations. For S corporations, there are strict guidelines as to who can own one, but if you're a U.S. citizen and you own your own trucking business, more likely than not, you meet the criteria and don't have to worry about that. There are a few reasons why you wouldn't want to have an S corporation is this last information here. So for those who own more than 2% interest, which if you own your trucking business, then that would be you. If you own more than 2% interest in an S corporation, the benefits are something that you have to get from a spouse's plan. Otherwise, you won't be able to get it from an S corporation. So if you have a spouse who has a full-time job with a regular employer and has benefits that you can be on, then this won't impact you. But if not, then the drawback is that an S corporation is that the health insurance and other fringe benefits are excluded from tax deductions. Obviously, you can still buy your health insurance, but they're not tax deductible for the business. So any medical insurance and benefits, including like HSA contributions, they have to be added to the wages of the employee, and so they show up on the W-2 and then they're taxed. But they can be deducted on the personal tax return as self-employed. Health insurance, Schedule C. There's some different things going on with that, with the Schedule C. So just check with your tax professional before you make the election if this is a concern of yours. We have insurance through my 9-to-5 employer, so it's not an issue for our S corporation status on our trucking business. Now, before I give you that real-life example tax calculation that I promised you, as a thanks for clicking the like button, would you do me a favor and click the like button? Here are some bonus tips that I have learned from experience that you won't find in other videos. Okay, tip number 1. If you choose S corporation status and you change your mind, which I don't know why you ever would, but if you do, you don't really have to wait 5 years to choose another election. You can just break the rules by not meeting the requirements, like selling shares to an ineligible corporation or a non-resident alien, or the easiest I think is creating common and preferred stock. So doesn't take much to create stock. You just say, hey, these are my common, these are my preferred stock. It's totally legal to contact the IRS and say, hey, I broke the rules, and then you'll just lose your eligibility and thereby you'll lose your S corporation status. But be 100% sure before you make that change, because once you do make the change, remember you have to wait 5 years before you can choose S corporation status again. And of course, if you do decide to do it, chat about it in advance with the person who does your books so you can strategize on the timing of it. You'll more than likely want to do it at a quarter end or year end. All right, tip number 2. The Form 2553 election has to be made within 2 months and 15 days of forming the business, or after the beginning of the tax year that you want the election to start, which normally would be March 15th. But most people either don't know what they're doing, or they hire some fly-by-night attorney to put together their business. They throw together some paperwork, some business forms, and then they don't fill out the 2553 form. The IRS got so tired of people filing late that they not only have a form to file late, they allow you to file late without penalty, but they actually give you the reasons of why you're late. How crazy is that? All you have to do is pick one. Then you write this phrase here real big on the margin of your form and fax it over or mail it over to them. Remember to keep your evidence, so either your fact sheet, receipt, or send it certified mail, and keep that verification. Tip 2B, I guess, because it's still related to it. If you realize that, hey, I could have been saving a whole lot of money and I want to backdate my form, you can actually file late up to 3 years and 75 days. But if you go that route, make sure it's really what you want to do, and make sure it's worth the time and effort. There's no fee for filing the form late, but if it is accepted, remember, you didn't file the proper tax forms, which will need to be filed, and there's $205 late fee for each shareholder for each month for filing late. So unless you're getting a really big savings, if not, or if the calculation is just too complicated, I would say don't bother with it and just let it be a lesson learned for future reference. But I just wanted you to know that it is an option if you wanted to look into it. And then the third bonus tip is, as a solo S corporation owner, you have to pay yourself a reasonable salary. As an employee, you can max out your 401k and your Roth 401k contributions, and the company can match your retirement up to 25% of your salary up to the limit for the year, which will ultimately put more money in your pocket and again, legally reduce the total amount of federal and state taxes that you're required to pay. I'm not going to cover that in detail in this video, but if you want some help with it, let me know in the comments or contact me personally and I'll give you more details. Okay, here's the real life calculation I promised you. How much payroll tax an S corporation will pay depends on the reasonable salary you set. You want a low salary and you want a high distribution to get the biggest savings. The IRS requires you to pay yourself a reasonable salary, but there are no rules on how you come up with your number. But let me give you a tip. The IRS is very short on staff, just like everybody else, and they got bigger fish to fry than to worry about auditing you because you paid yourself a $40,000 salary instead of a $60,000 salary. There's also too many people out there who are trying to cheat the system and put a zero income for them to be worried about those who put a low salary. So whatever you put, you're not likely to raise any flags, but as an IRS enrolled agent, I know that the best policy that helps me sleep at night is not to cut any corners for a few extra bucks. We want to save money, but we don't want to put ourselves in jeopardy, and we want to be able to sleep at night. So we look at the industry standards like current job openings, what they're paying truckers. We look at industry surveys in different magazines, and then we use those to come up with a reasonable salary. I'm curious as to what you think about this. Let me know in the comments how much you would consider a reasonable range of pay for today's truck drivers in your area. I know it's going to be different by what area you're in, what kind of truck you drive, if you're over the road, if you're local. I know there's a whole bunch of different variables in there, but just on average, I'm curious as to what you think the average truck driver salary is. In our video, What You Need to Know About Money Management When Starting a Trucking Business, I walked you through our first year cash flow. In that calculation, the business revenue was $316,000 and the expenses, not including wages, was $144,000. We came up with a reasonable salary of $61,000. Using these figures as a corporation, the net income is $110,000, but since a sole proprietorship does not have salary, all the income is considered owner's pay, and the net income is $172,000. When it's time to pay FICA taxes, the sole proprietor has to include all of that income and pays 15.3% on the whole $172,000. A corporation would deduct the owner's pay as a business expense and will only pay the FICA taxes on the $61,000 compensation amount. In this example, having a corporation saves about $13,000 in payroll taxes. If you recall from the previous videos about entities, C corporations have to pay a corporate tax of 21%, which in this example is a $21,000 tax that the S corporation does not have to pay. For comparison's sake, we're going to say that the business owner in all these situations took out all the profits of the business. After the net business income is calculated, the profits for an S corporation flow through to the individual's personal tax return. You will still treat the remaining profits as ordinary income. There are several differences in deductions, but for comparison's sake again, we're going to just stick with the main factors, which are Sole proprietors are allowed to deduct half of the FICA taxes. Both sole proprietors and S corporations can deduct 20% of their business income for that Section 199A qualified business income deduction, which is not allowed for C corporations. And in all three cases, the individual will have a standard deduction before taxable wages are calculated. The end result is that filing as a sole proprietor or a C corporation ends up paying about $40,000 in total federal taxes and bringing home about $130,000, while filing as an S corporation ends up paying $20,000 in total federal taxes. Now remember, this is just an example. Everything is not going to fall the way that these calculations fall. Again, this is just some basic information just to give you a gist of how you can save money as an S corporation for your trucking business. As I stated earlier, if you decide to have S corporation tax status, you will want to hire an accountant or bookkeeper, someone who has experience in posting payroll, filing monthly estimated payroll taxes, and quarterly tax returns. But as I mentioned at the beginning of the video, you can see that paying someone $200 or $300 a month, which totals less than $4,000 a year, if you're going to save $20,000 a year, it's well worth the savings, because you're still going to come out with a net of $15,000, $16,000 that you keep in your pocket in this example. Now remember, I'm an accountant, but I'm not your accountant. So make sure that you consult with your financial planner, your accountant, your bookkeeper, whoever you're working with on your business financials before you make this decision. But hopefully this is some information to get you started, to get you thinking, so you can see how filing as an S corporation tax status can help you save taxes on your trucking business. If you enjoyed this video, I have another one where I walk you through a business plan and I show you what our first year budget looked like when we started our trucking business. I also show you how you can make financial projections to know if your business is going to be profitable. You can watch it by clicking right here on this top video. That's your money for today. Thank you for watching. I'm Linnell Chappelle, and I'll see you in the next video.